ongoing, we decided to combine this session with the voting process. If you like EURS, but somehow you haven't voted yet, please follow the link I shared in the chat and do it now. We really need your support there. Well, here's the link. So, already shared our agenda of this call, so we'll not miss the point, as we'll surely have a lot more questions along right. So, I see that the audience is there and it's ready to engage, so let's do it. Okay. Hello, Gregory. Let's start with our main and the most important question for today. Why EURS needs DAI?
So good afternoon, everybody, or good morning, depending on the place where you're located. I think the question should be why DAI needs EURS, because it's the only stablecoin that was created with other crypto in mind and was crafted to produce stability to the cryptocurrency markets without accessing the banking system. And today, we are running a poll on the MakerDAO community forum to include EURS in DAI, primarily to reduce borrowing rates for that DAI token, because the Ethereum is very, very volatile asset. And everybody who trades crypto or wants to use crypto in traditional businesses needs a stable store of value and a settlement currency. So DAI is great as a concept, but it needs some anchoring collateral, something of tangible, easily accessible value to reduce its borrowing rate, to reduce its interest rates on the DeFi markets. And this is the reason competing stablecoins, dollar ones, were included in the DAI's collateral as early, I think, as this year. And now, since there is a big debate on the market, what will happen with the dollar going forward, I think it's time to introduce alternative to the US dollar and alternative collateral to the MakerDAO community, and the DAI token itself would obviously be Euro. I suggest people who have questions to just type them in the chat or send them to our email address at pr@stasis.net. We'll try to answer as many questions as possible. And like Alex said, we will try to reward the best questions with a 50 EURS compensation for asking the smartest and the most interesting questions. So please, guys, don't be shy. Post questions in the chat or email them to us. Alex, do we have some questions already?
Hey, Gregory, thanks for the answer. Well, I think it's time for community to engage and let us know what they think, what they want to answer. Oh, I see one coming up already. So how will general acceptance of stablecoin, especially EURS, impact the financial sector? And if not generally accepted, what will still happen? How do you feel about this one, Gregory?
I guess this is the question in regards to the stablecoin penetration to the traditional finance and the way that multiple banks could threaten business models of multiple banks and payment processors could be threatened, as blockchain, as I'm a long fan of saying, disrupts clearing, custody, and settlement services. So if you can settle value 24/7 on demand without any particular institution telling you how to do it, it's in the benefit of a consumer, right? In the benefit of a final customer. And here there is clearly a divergence. Some countries like Switzerland, Singapore, Liechtenstein, Luxembourg, Malta to some extent are open to financial innovation. Other countries and their banking institutions face significant challenges, right? And want to restrict these businesses, these assets from happening at all whatsoever. We know multiple customers who had their accounts either closed or threatened to be closed because they transacted with cryptocurrencies. So I anticipate that will change slowly but surely. If 3 years ago you could hardly get an account to transact in crypto, 2 years ago you had to deposit significant amount of capital to be able to transact with crypto. Starting this year, you've got service providers who just ask you for some monthly fee, and then you can transact in digital assets. And going forward, with the increase of penetration technologies like chain analysis, coin firm, blockchain analytical firms, it will be easier to conduct due diligence on the customers transacting in digital assets, and that the costs of servicing those clients will drop, and more financial institutions will be able to service those customers. So there's definitely an overlap and competition, and one industry hates another and vice versa to some extent. But there'll be more and more countries competing for this fintech opportunity to regulate and license digital asset companies. So in the end of the day, innovation will thrive.
Impressive. I think that's a great answer, Gregory. Thank you. All right, I see more coming from the audience. And one is very exciting since it's about regulations, the hot topic. So, Gregory, what's your view on the current regulatory landscape? And how do you anticipate regulation to evolve in this space in this year, maybe last year, or in 2021?
So regulation has been a hot topic for multiple years, and there is a divergence clearly as US, for example, United States, that is having a really hard time figuring out a proper legal framework. Some European countries try to innovate and introduce some legal framework, for example, Malta, but we yet to see those laws come to effect, right? So they are there, the laws are available, but they are not working. So no digital asset company can get an account, banking account, for example, on Malta. That's a reality. Some projects even have had to fold, like Founders Bank, very famous project that attracted funding from Binance, was not able to get a license from the local Maltese regulator, MFSA. So there is definitely a significant hurdle to overcome. To some extent, Estonia, right, which was famous for its cryptocurrency licenses, recently announced a significant cut or withdrawal of those licenses. So the short answer is the world is still experimenting with these digital assets, and there is no single destination you can go to make sure your blockchain startup will be regulated. And in this environment, we take a self-regulatory approach. So we self-regulate our company to the finest and best possible standards. We brought in an auditor. We totally implemented the Chinese wall from trading activities and our token issues. So we as a company, we don't own any EURS tokens. It all belongs to our clients. And our job is to hold interests of these clients and make sure they're comfortable transacting with our tokens, accessing our fiat off and on ramp channels. And there is no regulation for that currently, unfortunately. I anticipate going forward, e-money regulation will adjust across European Union to include stablecoin business model in its list of possible activities. But for now, like I said, there are several big divergences. In US, most of the crypto is not regulated nor considered to be banned. In Europe, there are some countries that are allowing digital assets. In Switzerland, for example, you can pay with crypto for your train ticket. And other countries are still in decision. So they need to more and more successful projects to convince them that this is the asset class that is here to stay.
All right, thank you, Gregory. I remind you, audience, anyone who came like a few minutes ago, please don't hesitate to ask. We'll share a reward after this call ends. And Gregory, I see another one about decentralized finance. So decentralized finance projects are a major concern for the STASIS community. Well, little wonder. What's the direction for development in this year? I think it's a hot one.
Decentralized finance definitely has been one of the hottest markets over the course of last 2 years, I would say. If you look at the prices of decentralized finance tokens or tokens that represent those projects, they increased 10 times in value since this spring alone. So we definitely like these market initiatives very much and see a lot of potential demand for products like money market funds, checking account, savings account, because what decentralized finance is basically a replication of traditional lending and borrowing on a smart contract basis. So some can deposit stablecoin and get Bitcoin to borrow, or vice versa, deposit Ethereum or Bitcoin and get a stable coin instead to spend on some short-term cash needs, or just to avoid the credit risk of an exchange in margin trading. So this is all exciting stuff that's happening with Curve, Synthetics, Yearn Finance, another great example. People are experimenting in this regard, and our job is to make sure we provide efficient on and off ramp channel to those protocols. With EURS, one can literally integrate a Euro checking account in his platform to facilitate on and off ramps from the protocol to and from protocol using Euro SEPA transfers and Visa and MasterCard. And I think we have the lowest fees on the market for those activities. So that's our number one priority right now. We haven't started developing our own DeFi lending platform just yet, but this is possible going forward. We continue to learn from existing market participants to better understand how we can improve the user experience, and maybe we come out with some alternative platform. This is the way EURS was born, actually. We did trade digital assets and realized there is a need for cash on chain. That was 2015, 2016. And then Tether came along, which is now the most famous, most popular stablecoin. So I wanted to create something of the same concept, but with much better quality, institutional grade quality. And this is how the EURS basically started.
Perfect. Well, I nearly missed one great question from Francesca about our business model. So how can we earn money while euro interest rates are negative? I think you have to take that.
Yeah, it's true. Euro interest rates are negative and has been negative for quite a while. In our case, this is one of our core advantages and edges in this industry, since me personally and my team has been in hedge fund business for more than 15 years. We know how to manage capital and we always track for the risk reward parameters of it. So in our case, we have several licensed custodians with whom we store euro that pay us a little bit of interest, because they resell that collateral for customers who purchase government bonds on margin, and they need some external financing to support that. The government bonds in Europe are also negative interest rate up to some extent, but the point is that there are multiple investment programs running in Europe, and these investment programs require customers to purchase government bonds. And those are quite sticky customers, so they're not going away next couple of days, months, or years. They have to hold these government bonds for almost a decade, because otherwise they'll lose their residence permits and their ability to live full-time in Europe. And so the investment bonds are quite popular marketplace, which our custodians help finance, and in the end of the day pay us some interest. We currently have capacity of up to 500, 600 million without any haircut to the interest rate we might receive. Going forward, we are looking for ways to improve it in the capacity, I mean, by launching our money market fund that will be able to facilitate shielding of the negative interest rates, shielding our customers from the negative interest rates.
Okay, I see the next one. So what would be the added value for consumers to use stablecoins or the current digital mean of payment? What do you think about that?
So primarily, stablecoins have the same characteristics as all other cryptocurrencies, say Bitcoin, Ethereum, and I say the main advantage is on-demand accessibility. So there is no AML layer, how you call it. When you send money through the bank or the banking system, it's the bank to decide if the recipient is good enough, if your contract is good enough, if the amount is relevant for your spending habits and all that stuff. So when you send a stable coin over a network, it's just 100% guaranteed that the transaction will settle. Plus, it also works during weekends or banking holidays. The network always works. It has 100% uptime. So that's the primary value of it. And then as you see a lot of applications develop over blockchain, and decentralized finance is just one example of them. There is a business case to be made that inevitably there should be some cash on chain, right? So all those customers out of Europe who want to access decentralized finance applications, they will need the asset that has the same characteristics as the blockchain-based assets. So if they transact with Ethereum or give or loans in Ethereum or borrow Ethereum, they need some sort of euro analog that has the same settlement characteristics as Ethereum. That means it has to live literally on Ethereum network, and that's where EURS comes in.
Okay, here's the next one. What is your long-term vision of the CBDCs and stablecoin field that Stasis operates?
Can you ask again? What was that about?
What is your long-term vision of the CBDCs and stablecoin field that Stasis operates in?
I don't understand. Is the question about how can CBDC compete with Stasis, or can you please rephrase it?
Well, yeah, I think that community wants to know something more about CBDC and our relation to this.
Well, CBDC has
different fields. Actually.
Yeah, CBDC as a stable coin, it's a term that doesn't have a strict definition. I see CBDC as definitely not a threat to commercial stable coins, because the central bank will never issue something that will be available to public and have zero credit risk in by its design. So if a central bank to introduce a wholesale CBDC where everybody can access it, first of all, there is a technological challenge, as the money has to be a legal tender. That means every place in the central bank covered territory, say Eurozone, will have to technologically be ready to accept that particular asset or payment tool, which is clearly decades away from now. And second, then it will wipe out the commercial bank risk out of the system, because why would you store money with a commercial bank having just 100,000 euro of insurance associated with your account relative to an account with central bank where you just can transact through central bank and just completely avoid commercial bank money risk. So what I see as CBDC is a whole asset available by only to licensed intermediaries like banks themselves, commercial banks, maybe payment institutions, to settle between each other. So it not will be an asset available to the public. If if you reflect on the concept of CBDC, to some extent, Stasis can be considered a CBDC because we have a treasury at one of the treasury account at one of the central banks of Europe, and wherever we store them has very little risk associated with that capital relative to other commercial banking accounts. So we can say we are a pilot CBDC that is live for more than 2 years already.
Okay, I think that clarifies the point. So the next one is, how do you evaluate counterparty credit risk for your reserve holding agents?
Yeah, very good question. So usually it has to be a company that's required to segregate customer funds. It has to have custody license, and it has to like I said, segregate customer funds. So it doesn't have to be, it cannot be a bank because the bank does not segregate customer funds. And second, we apply a 5% principal rule. We don't hold more than 5% of the, so let's say the amount we store at a particular counterparty cannot exceed 5% of its total assets, meaning that we want to be really, really liquid. And in case an institution will experience some liquidity shortage, we'll be the first to withdraw. That, in a nutshell, is a broader strategy, but it paid off so far, as we are the biggest non-dollar stablecoin on the market, and no other euro stablecoin made it that far as we did, because it's very hard for people to navigate through the negative interest rate using vast amounts of capital.
Okay, I see a question from India. What Stasis is looking for India and Indian people, since they have substantial population and this area is booming right now? What do you think, Gregory?
Well, India, Africa, and all other continents that are considered unbanked, or let's say very few people are banked there. We don't have a particular strategy to execute in India, but we have our Stasis stablecoin wallet, which is available on iOS and Android mobile wallet, which is a non-custodial solution to transact with other stablecoins and EURS particularly. What's beneficial maybe for India is that if people from India transact through Stasis stablecoin wallet, they don't have to pay Ethereum fees, gas fees. It's not just particularly for India, but it's just the way our wallet works. But since Indians could be relatively Indian people could be more sensitive to the fees they pay to the network, it could be more beneficial to them. I think our acquiring gateway also supports Indian cards. So if somebody from India wants to purchase EURS stablecoin using a card, he's more than welcome to try doing that. But besides that, I think it's just another hard currency for Indian people to keep part of their savings in and not be influenced by the local inflation rate or the local governmental policy on access to the banks, etc. Because anybody can download Ethereum wallet, any basically Ethereum enabled wallet, and get a checking account in euro, holding EURS in that wallet. And like I said, with Stasis wallet, it's just a little bit more beneficial because it doesn't require gas fees, network fees to be paid by a user who transacts.
All right. I see another question. What is the most convenient way to buy, sell EURS, and where does EURS have the largest liquidity?
Okay, yeah, it's the question we've been receiving all of the time, I guess, through our 2-year history, and we made it very easy to buy EURS directly from a bank account or using a payment card through our payment interface called Stasis Sell Bag. Alex, can you post the link to our chat? But basically, it's an interface where anybody can buy and sell EURS using existing financial infrastructure of their own. Like I said, it's either a Visa or MasterCard or an IBAN account. Of course, that means that people from Eurozone benefit the most because they can buy EURS paying with euro one-to-one without any fees at all, without foreign currency transaction fees. And with cards, it's just 1.5%. It's not our fee that we charge. We don't make any money on that. It's the fee that we pass through from acquirers who allow to buy EURS with a card, say it Visa or MasterCard. I think it's the lowest fee on the market currently. I heard even big exchanges out of US and UK charge at least two times that to purchase via card transaction. And on the wire transfer side, we are pretty much in the market. It costs zero to buy and just 0.1% capped at 50 euro to sell. Alternative would be to buy through crypto exchanges, where we have pairs traded against Bitcoin, Ethereum, a couple other tokens. You can check all of them on aggregators, Coin Paprika, Coin Market Cap, Coin Gecko. You're free to use any crypto market aggregator to see where EURS liquidity is.
All right, the link is down in the chat below. Please check it out. And we're going to another.
Oh, by the way, let me remind about the wallet, because this would be beneficial. One can buy EURS inside Stasis wallet. Can you please post a link to the wallet again? Inside the wallet, there is an on-chain swap mechanism, which is trustless opportunity to buy and sell EURS using Ethereum or Bitcoin. The transaction limit is 5,000 euro per transaction, but the settlement is wherever the network allows. So it's a couple minutes for Ethereum and like half an hour for Bitcoin.
Great, please check it out. And I see you have more questions about DeFi, but you already answered that. So I want to ask you that. How safe is Stasis project? How's the scenario? What happened to anti-gox eliminated? Well, I guess it's about our security more than the anti-gox case.
So we don't have any component of assets that is available to access from internet. So in the MTGOX case, there was a hacker who penetrated their database and withdrew significant amount of bitcoins, customer bitcoins. In our case, all our collateral or customer deposits are stored in the form of fiat at our custodians. And nobody can really penetrate and steal that. It's impossible. It all belongs to the issuing entity, which is the issuer of a stablecoin itself. As for the other security risks, it's the Ethereum network that we use. So whatever security the network offers, we comply to it one-to-one. So if it costs to attack a couple billion US dollar equivalent in the Ethereum network at this particular moment, that means that we are totally safe with our 32 million, I think now issued EURS tokens. That means there is no economic sense to do double spend attack on Ethereum token, right? It applies for all stable coins that operate on Ethereum. We are the biggest non-dollar ones, but still we are much smaller than, say, Tether or USDC or USDT or TUSD, all those. But I guess we share the same environment.
Right. So our community wants to know about our partnerships. So can we reveal something about who we are in partnership at the moment?
All our existing partners are listed on our website. I can't remember all of them and don't want to mention anybody particularly because I treat all partners equally. So I suggest you just navigate to the website to see the list.
Let's check on our website, and we're going to the next one. Will you be working with Celsius Network to listen their app? I guess it's about our future initiatives or partnerships. Would you elaborate on that?
There are several centralized lending platforms that we will, of course, would like to cooperate with on EURS lending markets. I think Euro can have the lowest borrowing rates in the lending markets, primarily because of the negative interest rates it experiences in the capital markets. And since our job is to bridge that Euro equivalent from traditional markets to crypto markets as close as possible, we would be gladly collaborating with any lending platform to make EURS markets available to the crypto community. In fact, I think in a decentralized lending markets, EURS can have 1, maybe 2% borrowing yield because there is significant demand for yield in euro. So people will just buy EURS who hold some euro holdings just to generate some yield on it. And the sensitivity is enormous. So at 1% yield on the EURS token, there'll be probably 100 million of demand. At 2 or 3%, there could be a billion in demand. And that is all because people are struggling to generate any yield in euro terms with cash they hold. So yeah, we're definitely open to collaboration, and please, if you have somebody in mind, email to corp@stasis.net and we'll definitely evaluate.
All right. Here's a controversial question. How Stasis EURS is better than Tether or USDT?
So Tether was something I inspired with when creating Stasis, and the goal was to create an institutional friendly asset or institutional grade quality. What's wrong about Tether is nobody really knows what it's backed with. But most people don't care, either because they're too unexperienced or they just don't have enough of a financial educational background. Or, and it's a valid argument, some people think the music is playing and the chairs are standing, so they're playing a music game. But having lived through several crises, I know how sometimes market could be really harmful to negligence. And the closest example would be mortgage crisis in the United States, where a lot of securities or assets were considered safe and were trading at par, as they say in on the trading floor. So 100 cents on a dollar. And those markets were really, really healthy and liquid, and everybody was convinced it is the right price. But then suddenly, and that's because, of course, of the fundamental deficit, fundamental flaw in those assets, they traded all the way to 10, 20 cents on the dollar. And people could not really escape that significant dislocation of their capital. So when you're buying a stable coin, to some extent, you are risking 100% of your capital because there is no upside for a stable coin, or at least not that you can count on. And the only thing you have to be worried about is how much the stablecoin protects me from the downside. So my concern is that Tether does not protect customers, people, community from the downside well enough relative to us. We have 100% of collateral backing our token, and we are, I guess, the only project that has a top auditor in place who is auditing those reserves on a frequent basis. In fact, with the APIs that now allow purchase and sale of the EURS versus fiat or cards instantly, anybody can create their own EURS to Euro liquidity center and purchase and sell EURS in a real time. And that just proves how efficient we are and that we have all that collateral in place backing those tokens. And I think in an event of some dislocation or some collapse of other stablecoin, particularly Tether, all other stable coins will benefit. So holding other stable coins rather than Tether could be considered as a call option. So basically an insurance from Tether collapse, because once the S word hits the fan, everybody will rush to liquidate their Tether holdings, but there may not be enough of other assets to buy. You could have witnessed that during multiple exchange hacks where assets like Bitcoin and Ethereum cost more on these exchanges that were experiencing hacks. And this is primarily to the reason that this credit risk, this risk that market embeds into an asset is replicated in the relative overvaluation of another asset that is trading in the same environment. Another guidance how to value risk of Tether would be the borrowing rate for Tether. I'm pretty confident if we launch the EURS market on some DeFi lending platform or even centralized lending platform like Celsius, EURS will have very, very low borrowing rates, the lowest borrowing rate on the market, while Tether has high borrowing rates, closer to double digits or even higher. That gives you the estimate of how risky it is, and even double-digit borrowing rate for Tether is still probably not enough to compensate for the risks there are. But it's your capital. Everybody decides for himself. I think there'll be time for alternative stablecoins that are credible, audited, and fully collateralized, and the market will evolve to that moment either naturally or some regulator will force it to.
Well, thank you. Today, the regulatory landscape is pretty bad for blockchain-based projects. And what do you think about Libra? Will it ever see the light of the day?
I don't think regulatory landscape is bad for projects. Who said that? In fact, you could do any blockchain project you want. Right now, you just have to pick the jurisdiction. So I totally don't believe it's bad. It's evolving. That's the good thing about it. And the fundraising methods have to be wisely picked. But I don't believe it's bad. I totally disagree on this statement. Libra's mistake was to bundle currencies. So they wanted to put in one basket dollars, euros, pounds. And this is impossible because central banks have different mandates. So it's impossible to create a derivative mixing all fiat currencies in one basket to live in a decentralized world. And again, I can bring an example from the previous times on the capital markets where the European Central Bank was raising interest rates in 2008 while US Federal Reserve was lowering them, primarily because these two central banks, and I understand for most of the population, they share the same idea of issuing national money, but internally, they have different processes and different mandates. US central banks is focused on unemployment, while European Central Bank is focused on price stability. It may sound not much of a difference, but in reality it is, and that's why one should not mix these currencies to create derivative on it. And Libra is now pursuing a way to create separate currencies, not a basket of currencies, but separate currencies. And we'll see how successful will that be with that strategy, but I'm totally for competition. I'm libertarian by nature, so I totally anticipate and welcome more projects enter the space and compete for the customer user experience and ultimately reserves.
Great. And there's a question about Stasis wallet. There are so many wallets out there on the market, and all of them can do almost the same job. In what aspect is Stasis wallet unique from the rest of them?
I think I covered that before, but let me just quickly repeat. It allows to transfer stablecoins over Ethereum network without having to worry about gas. So if you want to explain your grandma what a stablecoin is, you can just give her the stablecoin wallet and just send her some EURS. She will be able to send them to your bank or other your relatives, and she will not have to worry about gas fees or how much gas cost or what is Ethereum at all.
Gregory, can you give us an insight into the future? Will stablecoins ride the next wave of crypto adoption, and what's your outlook on the future on the stablecoin market?
Well, stablecoin market is just is very, very young. So, but still, it witnessed a tremendous growth this year, and I think it will slowly start penetrating other areas, other fintech sectors like acquiring, like remittance, like corporate settlement. Those are the areas that are very relevant for the stablecoin to penetrate, and the transaction cost is and the capacity of the Ethereum network is the only constraint. But I anticipate other blockchains will join this rally, and you already see some other stablecoins experimenting with other blockchains. We have our own plans in that regard. They are private right now. I cannot share them, but for micropayments, it's easier to use other blockchains other than Ethereum, but it's like internet in 1994, 1995. One could not watch streaming videos, right? But at the same time, there were projects that really experimented with this streaming videos. In fact, one of the companies is still around. It's called Real Networks. And in 1996, nobody really could access the streaming video due to the capacity constraint. And it took 10 more years for the YouTube to show up, say 2004, 2005, 6, and then another 10 years for the YouTube to generate a business model on its own. So we are exactly in the same situation right now with the blockchain networks as a settlement layer and stable coins. We are in 1996 to some extent. I anticipate next 5 years we'll see breakthrough in the capacity and the amounts of data and the amounts of transactions that could be processed through the networks with the same level of security will increase, and that will give more and more adoption, and more use cases could be commercialized using the stable coins over these blockchain networks.
Right. Can you give us insight on who is the competition of Stasis? What are the closest projects that are competitors?
So yeah, this is a very good question. We have, maybe I can show even a slide where there is a list of other Euro stable coins, which could be the closest competitors, I guess, at this particular moment. Let me quickly show the screen here. Maybe it's not very accurate slide. It was created a while ago, but those were the names that tried launching some stable coin backed by Euro. As you can see, other than Tether, there is nobody really with even like 10% of our volume, emission. So, and with Tether, there is a question like, do they really have the money at all, or they just issued some 50 million worth of Euro Tethers, which didn't find a use for them. But other stablecoin projects who tried creating Euro-backed stablecoin failed massively for now because they couldn't scale. And I guess that was partially because they couldn't figure out the negative interest rate component of the product value proposition.
All right, next, can you specify the challenges you think the project is facing now or could face in the forthcoming future?
Well, in our case, since the project has been funded by its stakeholders and it's operationally breaking even right now, but um, of course, we would love to have resources as other major competitors, maybe like Facebook or Libra or even Circle to some extent, because we are very efficient on our operations. But since there is still no regulatory perimeter for the stablecoin itself, we didn't do any ICO because I wasn't comfortable doing that. We didn't do any external fundraising yet. We might consider that in the future once market condition improves, but I think capital is the only resource that we would need to be more and more successful in the future. We have amazing team, we have first mover advantage, we have significant financial markets infrastructure, which we can capitalize going forward. We have the legal framework to tokenize other assets or currencies if needed. We can consolidate other non-dollar stable coins, for example. So there is a lot of interesting things to do in this marketplace, but the biggest challenge would be the long-term capital to execute on that.
All right. How long do you think it will take for stablecoin to become mainstream?
Well, I guess for that I can get you back to the YouTube example. So again, 1996 was the year where video streaming was something humanity experimented with. And now fast forward 24 years, YouTube is mainstream, right? Do you watch YouTube yourself, Alex?
Sure thing, like YouTube for crypto.
No, any YouTube, not just for crypto. Do you watch it on
Yes,
which
because it's a
basis?
mainstream thing.
Yeah, but how often do you watch it? Like daily, weekly,
It
monthly?
replaces TV for me. So yeah, I do it on a constant basis, daily.
So you see, so it took 24 years for the technology to scale and to become widely used and adopted. So I anticipate it will be the same, similar amount of time or relatively similar with stablecoins, say 15 years, 10 plus years. We've got to account that information moves faster these days, but still it's decade plus. It's not months.
Great. Let's come up with questions from our audience. Why European investors still prefer dollar currency and USD-based stablecoins? What do you think on that?
Well, I guess that is the fact that probably is the fact of new markets that are being priced in dollars. Every time the new market pops up, it starts to be priced in dollars. That happened with emerging market equities, for example, which when they first were introduced, they started trading in dollars before finally moving to their regional or native currencies. In crypto, it's not, it's not a secret that Satoshi is probably American or is coming from America. At least we can see that a lot of Bitcoin early investors came from America, from United States. And then there was Ethereum, who was really heavy in Asia. So you've got Americans investing early in Bitcoin and becoming really wealthy, and then you've got Asia, China, South Korea, all those countries investing in Ethereum and then becoming very wealthy. But Europe is an outlier to some extent. You don't have much of a Euro-based or Europe-originated projects, crypto projects, and you can also judge by the crypto ownership coming from Europe is much smaller relatively to US and Asia. So the penetration of crypto in US and Asia is much higher relative to Europe, and that is partially why you see more dollar backed stable coins or Bitcoin being priced more in dollar or the volumes, dollar volumes are higher than euro ones, but it's starting to increase. I mean, the adoption in Eurozone, and it's increasing from the very relatively low base, and it's picking up. And I have very high hopes for it, as Europe currently is at the forefront of the digital asset regulation. It's experimenting with many different concepts of it, and countries starting to compete for these fintech companies to register in the respective countries, like France, Liechtenstein, Luxembourg, Switzerland again. The dynamic is very positive, so I'm quite optimistic on the European market and the euro-denominated trading in digital assets going forward.
Okay, speaking of more future insights, can you speak of something that, why did you see Stasis in upcoming next like 3 or 5 years?
So we will continue to execute on the strategy we identified, being the most transparent, trustworthy, institutional grade stablecoin backed by euro. We will also penetrate several fintech markets, which are not directly crypto related, but have a use of a stablecoin inside them, like acquiring, remittance, and corporate settlement. And if we are fortunate enough, we will try ourselves in DeFi lending as well.
Great. Well, we're now live for an hour, and I see much questions left from the audience. Do you wish to proceed?
Yeah, I think let's have another maybe 20 minutes, 15, 20 minutes. If we continue getting questions, I would love to answer as many as possible. There were a couple nice ones, but I'm sure there are more questions. Let's hit on it.
All right, we're about to select in the end. So there's one question. What is a trapdoor function and why is it needed in stablecoin?
Can you say it again? I didn't get it.
What is a trapdoor function and why is it needed in stablecoin?
Sorry, which function?
Trapdoor.
Trapdoor.
Yeah, I didn't get it.
I'm not sure what's that. Maybe the person is inquiring about a blacklisting functionality of the smart contract that all stablecoins have. I need to address on that one because it's a really good question. Recently there were news that USDC or even Tether blacklisted some of the addresses, and the stablecoin users could not move funds associated with those addresses. This is part of the anti-money laundering regulation that is inevitably going to bite everybody who is transacting between fiat and crypto. And in a nutshell, what it says is if an intermediary is aware of potential fraudulent activity, it needs to take action, like some action. And that blacklisting functionality stablecoin issuers will use to take action in case of a court order or some significant criminal activity that they could be liable for. So it's the same actually happening with Bitcoin. And although with Bitcoin, there is no a native function to blacklist something, but you see the community blacklisting the addresses of Bitcoin holders associated with some hacks. You saw Binance, for example, freezing accounts that were funded from addresses associated with crypto malware or crypto hacks. And I understand that this might address some fungibility of digital assets, but at the same time, and it has to be applied very diligently. But at the same time, fiat processors and crypto exchanges should not be participating in money laundering. Otherwise, they risk all their operations to be seized. And since they have legal people on paper, they have directors, they have not even shareholders, but just operational people who could be who are innocent, and to some extent they didn't do any fraud, but they could be even legally prosecuted for allowing a particular money laundering transaction to happen. So I guess this is something that the community has to live with, and there'll be more and more tools and interfaces by blockchain analytical firms to help analyze the transaction and particular addresses who could be considered safe or relatively safe. This is probably will be the resulting action by the crypto community market to address those issues.
All right, there is another technical question for you to clarify. Is it possible to hard fork or soft fork the stablecoin?
No, it's not possible to fork a stablecoin. It's possible to fork the network a stablecoin operates on. In our case, it's Ethereum network. And in order to fork Ethereum network, one should launch a significant mining operation. But the ending result will be it will fork not just our stablecoin, but all stablecoins and Ethereum itself. And not just stablecoins, all tokens issued on Ethereum network. Such action already happened, and now there is a project called Ethereum Classic. I mean, the market is aware of the consequences that happen if this event arises, but there is no economic sense, at least for now, in doing that. And at the same time, there will always be a stronger network that will remain in place. So if tomorrow Ethereum network to be forked, I'm sure stablecoin projects will quickly figure out which network they have to honor and support as being the stronger one, the more powerful one, to which network the users will be able to quantify trust in more easily and with more comfort, then the same network will be supported. And since every user will get assets in two networks anyway, there couldn't be a loss to a user in any case. The user will, in any fork, the user has a call option to get something else, some other asset that could have some value. In stablecoin case, it will not have any value because the collateral cannot be forked, obviously, for obvious reasons. But the community user or general stablecoin user should not be worried about forks.
All right, I see that we are running dry on new questions, so let's go to the finish. And I see a good question here. What is Stasis' business development strategy, like short and long term? Can we specify those goals?
Stasis business development is very simple. We continue to promote the products that we created, being our crypto users ourselves, with a lot of love and passion for the crypto industry. We created a Stasis wallet. We created a Euro as a Service API, and please post link to that API description. With that, anybody can run his own Euro checking account on the website without having the requirement to register anywhere. It could be run in a trustless environment. And to some e-commerce businesses, it's beneficial because they can start accepting cards or Euro payments instantly just by starting settlement procedures in our stablecoin and using our APIs. So our business development strategy is to promote these products we created, and then address the issues and questions our community asks us to do. For example, with this wallet, there was a debate whether should we add other stable coins to the wallet, since we started with DAI as the EURS and DAI were the only stable coins available in the wallet. But then since our community requested that, we added more tokens to the wallet, more stable coin tokens, which users can transact with. And with the Euro as a Service API, we get requests every other day, and we constantly try to improve it to have our customer the best user experience, and for their users and themselves to accept payments from traditional financial world and settle into the stablecoin instantly.
Great. Well, I see that we're running out of time, and let's finish it with a smile. There's a nice question here, like, will you convince Elon Musk to buy Stasis?
I don't think Elon Musk needs Stasis EURS token unless he wants to, or unless he has some euro as cash that he stores and pays negative interest. Primarily, it's an asset that is used for people who have euro as a balance sheet currency, or who pay taxes in euro, or who generate revenue in Europe. But maybe he could be interested selling Teslas for EURS tokens. That could be of a very useful utility to our community, and we could facilitate all the acquiring needs in that regard. So I don't think personally he will, but for business-wise, it definitely makes sense, since our community and network of users is expanding, and that will be another payment channel for the company.
Oh, that's great. So I see we have no more questions. Greg, can you please pick 3 best questions you liked during the day?
Okay, so I really liked the credit risk question. So how we segregate credit risks of our custodians, and how do we figure out what custodians to use and how to store that euro collateral. Then I did like the question about the business model. And basically all DeFi questions were great. Maybe I didn't address all of them, but I know we've been receiving a couple of DeFi questions, so just reward all the DeFi users who are brave enough to trust some of their capital to the smart contract or some smart contract without particularly maybe or deeply understanding how these smart contracts work. But all these DeFi newcomers and people who use DeFi products are very brave and innovative enough, and you guys will make history. So I liked all the DeFi questions on top of the
I
ones
guess
I
that's
already mentioned.
the most popular question both in socials and here. Great.
Yeah. So
So
guys,
we're about
guys, if you asked the DeFi question or the ones I mentioned before, please reach out to Alex at pr@stasis.net, and please email your wallet address, and we will be able to reward you with some EURS tokens.
Yeah, please reach out to us today, and we're about to announce winners in our socials very soon. So Greg, thanks you for your valuable time. Thanks for this great conversation. I hope we make MA session again, because I believe community has more question. So thank you. Thanks everyone for joining us today, for having your question answered. And thank you for your support on MakerDAO. If you haven't voted for EURS yet, please go check the link and vote for EURS, because your support really matters to us. So thank you. That's all for today. Have a nice day or evening, whatever you are. We'll have different time zones, I believe.
Okay. Bye-bye.
See you.